Hi, good morning. My name is Drew Moore, and I've got Nick Fitzgerald, one of our commodity risk management consultants on the commercial side of the business, and Brian Basting today, one of our research analysts. And we're going to recap the April USDA report. As of right now, corn is up 6 cents in the nearby May contract, soybeans up 24 cents, and wheat up 19 cents. So with that being said, Brian, we'll talk about wheat. Obviously, that's been getting the brunt of the attention over the last 6 weeks with the war in Ukraine. With that being said, curious to get your insights on how much is left unplanted and what the USDA report said today.
Looking at the USDA report first, Drew, we're looking at USDA taking into account that the ports remain closed in the Black Sea region from Ukraine. So They did reduce Ukraine's exports for this 21-22 crop year, another 1 million tons. So that's 5 million tons we've seen the reduction in Ukraine exports from February to April. Now, the USDA did take a different stance on Russia today, Drew. They increased Russian exports for old crop by 1 million tons, so they netted out to be zero there. But interestingly enough, the USDA did reduce U.S. exports this old crop year, 25 million bushels today. Here's the key message. Continue to see indications that from now to the end of the old crop year, the combination of the record crops in Australia, Argentina, and absolutely strong exports from India are really keeping the U.S. out of the old crop market. Now, the new crop, of course, will be a different kettle of fish, if you will. However, you mentioned one thing very important. There are indications, for example, a report today from the UN Food Agriculture Organization that up to 20% of Ukraine's new crop wheat will not be harvested this year. So that could be between 6 to 7 million tons just because of the disruption, obviously, with the war, lack of fuel or equipment. 6 to 7 million tons, Drew, is a lot of wheat.
Absolutely, absolutely. Thank you, Brian, for that. Nick, over to the corn side of the ledger, what stood out to you on the report today now that we have the stocks and planning intentions information in our balance sheet?
Yeah, Drew, with that out of the way, what we saw today was basically no change on the carryout. So we took the carryout, like I said, just the same as last month at 1,440 million bushels. So not much change there at all. What they did do was they took feed and residual down 25 million bushels.
Okay.
They took it down to 5,575 5,625. And our expectations are we could see that continue to lower, kind of on the heels of smaller than expected first half feed implications and plenty of avian flu and other stuff for the last half here that we're watching.
Sure.
They also took up ethanol 25 million bushels, and then unlike wheat, they basically changed exports. They kept them the same. So kept exports at 2.5 billion bushels.
Okay.
Where thoughts are we could see those jump a little more here in the near future.
Sure. Makes sense. Brian, what about the soy complex? What stood out today? And curious to see if the South American crop was accurately reflected and if we're done lowering that crop.
A fascinating divergence in the soybean market, Drew. Here's what we're looking at. The USDA today did reduce the South American crops. Specifically, they reduced Brazil another 2 million tons down to 125. Now, there's a bias in the trade, Drew, that number could edge lower here yet in future reports.
Yep.
They did reduce Paraguay also by another over 1 million tons today. They did leave Argentina unchanged. A bit surprising there. A lot private estimates are lowering the Argentina bean crop. They've had some freezing temperatures down there, which may have affected their second crop, double crop beans. Basically looking at the bias in the trade, in my opinion, is that we're looking for some lower numbers yet on the South American production. However, the USDA did lower the soybean imports today from China by another 3 million tons. So we're looking at the last 2 months, the USDA has reduced China soybean imports by 6 million tons. So you're looking at diverging supply and demand factors there. China continues to struggle with crush margins, a lot of things happening over there. So we're looking at a market that's really trying to get its arms around how big the South American crop is and, Drew, how weak the Chinese demand is.
Right. Thank you, Brian, for that. Nick, over to the cash side, what stands out here, and what are cash implications post USDA report here, and moving forward into spring? Nearby spreads in corn and soybeans. Can you touch on those dynamics for us?
Yeah, absolutely, Drew. With the report out of the way, I don't see much change versus where we were at, prior to 11 o'clock. What's going on now is we have this large index roll. We're in the second day of that.
Sure.
And we're going to see that finally finish next Wednesday. So what they do is they'll roll from their longs from the May out to the July at the very end of the session each day. So we've got that going on. While at the same time, the cash markets, Drew, are starting to really firm out west, where we see cash kind of not quite to where we saw it pre-Ukraine war, but we're seeing values back up to close to or right at DVE. Out east, we're also seeing values start to firm as well on corn and beans, which is typical for this time of year. The big thing I think for spreads going forward is barge freight, rail freight. Both continue to be very high. We continue to see issues around the U.S. with freight in general, but with COVID restrictions coming off and values where they're at, we're kind of watching those to maybe relax a bit. At least the barge freight potentially here, as we've seen maybe this morning with values weakening a little bit. So overall, I think the May, July spreads are going to be tough into the very end.
Sure.
Still a little friendly right now. And then the July forward spreads probably lean more friendly right now.
Sure.
And then the new crop spreads probably lean friendly right now too, as well, until we get a better idea on spring planting.
Makes sense. Good intel there, Nick. Thank you very much. Brian, planting season is upon us in the Northern Hemisphere, and certainly locally, but we haven't seen a lot of planters rolling, if any, at the current moment. So tell us a little bit about that and what we should expect, looking at the weather forecast moving forward.
Certainly, producers are prepared, Drew, with the markets at all-time highs here for new crop December corn, new crop November soybean futures for this time of year, all-time highs. Producers are prepared. But the weather doesn't look like it's going to cooperate for the next couple weeks. It looks like it's going to warm up here early next week for a couple days, but then there's a lot of rain moving in midweek to late week next week. So if we were to throw out a number there, we might have to keep the planters in the shed until after Easter this year for another 2 weeks here.
Sure.
However, we still got plenty of time here. We don't want to jump the gun with so much at stake in terms of preparation here and price attractiveness. But it looks like it's going to be at least another 10 days before we really see active planting, at least in the Midwest. However, in the South has really experienced some challenges down there.
Sure. Thanks, Brian, for that. Nick, a little bit more of a broad-based question for you, but what's the hot topic in the commodity world right now?
Yeah, I think besides everything, I'll piggyback Brian a little bit here. And as Brian mentioned, the South has started planting very wet, and typically to start, that southern Louisiana planting, their window is basically closing today. So talking with people down there, producers, elevators would say that the initial start to this planting season is maybe 20 to 30% less corn acres, which in the big picture is not a lot, but it doesn't start us very well into the planting season. And then pair in with what Brian said about the next 2-3 weeks, soil temperatures, I think we've got a lot of stuff there to focus on with weather, let alone South America weather. And of course, Ukraine ongoing. So I think between those three things, would be one idea of the issues, kind of the hot topics in commodities right now. Sure.
That makes sense. Thank you for that. We do have a question from the audience pertaining to food shortages. So obviously, when you look at the total of Ukraine and Russia, depending on the year, it's about 29% of total wheat exports, right? And if you look at the country breakdown of where at least Ukraine is sending those wheat exports to less developed countries, right? So are food shortages real? Are they going to persist? Any thoughts there, you guys?
History is written as we speak, Drew. I think we're looking at Ukraine being such a key factor, as you mentioned, in the world market, not only for wheat, but also for corn. The next 3 to 6 months are going to be really important because, as you said, Ukraine supplies a tremendous amount of wheat to that Mideast, to that Europe, Asia, or that area that would be very sensitive to wheat. And I think that for the short term, perhaps there are enough supplies around the world from Europe India, the Southern Hemisphere,
Right.
to bridge that gap. But eventually, either the market will have to make some adjustments in terms of meeting that misplaced or unavailable wheat, or we're going to have to see some resolution to this Black Sea situation, because it's a serious situation moving forward with the volume of corn or volume of wheat that will not be available if this situation persists in terms of the port closures in the Black Sea region.
Sure, that makes sense. Well, thank you very much both for your time today. Good Q&A, and we'll look forward to speaking with you next time.